You know, Ola Electric, it was supposed to be the future. Hailed as India's big EV disruptor, its IPO was one of the most hyped events in years. But today, that stock has absolutely collapsed. So in this explainer, we're going to break down exactly how a market darling could crash and burn so spectacularly. So let's rewind the clock to the beginning. August 2024. Ola Electric goes public, and the hype is just off the charts. The IPO is priced at 76 rupees a share, a valuation that was built entirely on this massive promise of hypergrowth and total market domination. Investors weren't just buying a piece of a company, they were buying into a story, a narrative of a true industry game-changer.
Okay, now fast forward just 16 months to December 2025. And wow, what a different picture. The stock has been completely decimated, trading at around 36 rupees. That's more than half of its value just gone. We're talking billions in market cap wiped out, and the confidence of all those early investors absolutely shattered.
So what on earth happened, right? How does a company go from being the poster child of India's entire EV revolution to a total cautionary tale in such a short amount of time? Well, let's get into it. Let's really dissect the anatomy of this collapse.
When you boil it all down, this whole story is about a giant, unbridgeable gap, a canyon really, that opened up between the company's incredibly ambitious promises and the harsh, on-the-ground reality of what was actually happening.
I mean, look at the two sides of this coin. On one side, you had that shiny IPO narrative, a high-growth, world-beating tech company that was going to own the future of mobility. And on the other side, the grim reality of 2025, sales in free fall, market share just bleeding out, and an investment thesis that had been taken apart piece by painful piece.
So what was the real trigger? The thing that kicked this whole mess off? It wasn't a bad market or some industry-wide problem. No, this was a catastrophic, completely self-inflicted failure in one absolutely critical area: after-sales service. And pretty soon people, customers, analysts, you name it, they started using some really powerful language to describe what was going on. They started calling it service hell. And this wasn't just a few angry tweets. We're talking about a complete systemic breakdown. Reports started coming out with images of service centers that look like scooter graveyards, painting this incredibly grim picture of total operational paralysis. This whole service crisis really boils down to a perfect storm of three internal failures. First off, a severe shortage of spare parts, which meant even simple fixes could take months. Second, there just weren't enough trained technicians who knew how to handle the complex problems. And third, the scooters themselves had really high failure rates, which created this relentless flood of service requests that the system just, well, it couldn't handle.
Now, this service crisis wasn't just some internal headache. Oh no, it set off a devastating domino effect that directly created the company's sales and its entire standing in the market.
I mean, the numbers here are just staggering. This is official Vahan registration data. It tracks every new vehicle sold in India, and it showed a 71% year-on-year drop for Ola in November 2025. Let me be clear, that isn't a slowdown, that is a collapse. It's proof of a massive trust deficit because potential buyers heard all the horror stories and they just stayed away.
And the end result of all this? A complete and dramatic fall from grace. Ola Electric, which was once the undisputed king of the market with over a 35% share, just plummeted down to 5th place. They got overtaken by legacy players like TVS and Bajaj, companies that people trusted to deliver not just a reliable product, but maybe more importantly, reliable service. So with sales just evaporating, it was really only a matter of time before the company's financials started screaming disaster. The balance sheet began to implode, turning that operational crisis into a full-blown financial one. Now you have to remember, for a company whose entire stock price was built on the idea of growth, this right here, it's a death blow. Revenue plunged 43% year on year. That whole growth story that justified the sky-high IPO price, officially dead in the water.
And think about it, they've got this massive factory with huge fixed costs. So with revenue tanking, they were just burning through cash at an incredible rate, posting a net loss of over 400 crore rupees for the quarter. They had no choice but to dramatically slash their future forecasts, which basically told the market, we have no idea when this is going to get better.
Okay, so as if all of that wasn't bad enough, a few other things happened that were basically like throwing gasoline on an already raging fire. It all came together to create this
perfect storm that just accelerated the stock's downward spiral.
First up, something a bit technical but super important, lock-in expiries. See, early investors have to hold their shares for a certain period. When those periods ended, a flood of new shares hit the market. The biggest wave hit in August 2025, when over 440 million shares were suddenly unlocked. With the stock already tanking, you can guess what happened. Those investors rushed for the exits, creating this relentless selling pressure that just crushed the stock.
And then came the legal and regulatory nightmare. The state of Goa literally banned Ola from selling vehicles because the service was so bad. India's Central Consumer Protection Authority launched a massive investigation into more than 10,000 complaints. And to top it all off, serious allegations came out that the company had actually stolen intellectual property for its battery tech, just one thing after another.
So, here's the crucial thing to understand. Ola got trapped in this vicious negative feedback loop. It goes like this. The service failures destroyed customer trust. That lack of trust caused sales to collapse. The sales collapse created massive financial distress. And that financial distress meant they couldn't afford to fix the original service problems, which starts the whole horrible cycle all over again. It's a classic death spiral.
The market has fundamentally changed its mind about what Ola Electric is. It's no longer seen as this shiny technology disruptor. Now it's viewed as a distressed automotive manufacturer. So the big question is, where does it possibly go from here?
Well, right now, the overwhelming consensus among market analysts is that the stock is what they call a falling knife. It's an old Wall Street saying for a stock that's dropping so fast with no bottom in sight that trying to buy it is like, well, trying to catch a falling knife. It's just extremely dangerous.
Look, any path to recovery from here is just incredibly narrow. It would mean rebuilding consumer trust from absolute zero, somehow reigniting sales, and fixing a totally broken operational system, all while you're bleeding cash. So I'll leave you with this final provocative question. Can Ola Electric actually repair this much damage? Or are we watching the end of the road?